Good morning, all. CamelbackTrading.org coming to you this Tuesday morning, December 20th. We are looking at Window Trader's market profile of the ES and SPY. And the theme just continues as sellers, right? When the market's trying to go one way, that's basically the way you should attempt to be trading until something tells us differently. Nothing will change. Nothing will change unless we take out a daily high. Last night, as you can see, we went a bunch lower. Just above the 3,800 level, we got to around 3,803. Bounced off of there. Right now, we're back inside yesterday's range. Now remember, ES left one little tick of single prints. So technically, this is a double distribution day, right? From E's low to the day's high and from M's high to the day's low. Now, in the overnight and pre-market, we've traded through both distributions. Okay, so we're going to see. Obviously, I mean, it seems pretty simple, but the bottom line is this. If we get acceptance into the upper distribution, first step is to take out the afternoon rally high in H, and then obviously yesterday's high. If you do that, you finally come back into balance on the daily. If we can't do any of that, well, nothing's going to change. We'll either trade in a lower distribution and or take out yesterday's low. Remember, again in ES, we missed filling the gap from back in November by literally less than 2 points. So if we take that out, we will fill that gap. SPY, remember, SPY, next destination, is still about $4.50 away. So if we start taking out daily lows again, there's a price vacuum below us, and sellers can get going. Okay, the next destination is pretty far below. And if we do start doing that, then we still have to start now thinking about a possible outside month down. All right, but first things first, let's take out yesterday's low and see what kind of tempo and volume we get to the downside. Triple Qs, right now, back and forth through yesterday's low. They did not have a trend day. And the Russell, been trading. They left single prints also. So they are a double distribution day. Again, overnight traded into the upper distribution, but for now they're in their lower distribution. So the theme is continuing as far as the game plan this morning. Okay. So in ES, again, against M's high, you can certainly take a short. Once they fill that little tick of single prints, I'd get out and reassess to see if they get acceptance into the upper distribution and then see what happens at the afternoon rally high. Okay? As far as a long play, again, can you take one against yesterday's low? Not particularly. Remember, it was a poor low yesterday. It's not like we're defending anything as far as one-time framing up or anything of that nature. You'd have a better risk-reward of shorting against yesterday's high to see if sellers defend the one-time framing down as opposed to buying against yesterday's low. Again, all early plays this morning. And then just quickly on the chart, right? I'll show you just a daily because nothing can change until the daily changes. The monthly's balanced, the weekly is down, outside week down, and the daily's one-time framing down 4 days below all three of its major averages, 20, 50, 250, and the 20. Volume yesterday that's one silver lining for the bears. It was just under 80 million, right? So we had 4 days in a row of over 100 million. So now when we just made another low yesterday, it was 80. So we'll see if that selling continues to dry up. But also, it's only one part of the equation, and it also is the week before Christmas. Good luck trading today. Thanks for the likes and subscribing, and we'll recap at 4 p.m.